Global property is set to soar. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Reuters, which is saying that global property market is ready to soar this year. Just what we need. Oh, and I mean, this article came out today, so this isn't a prediction from last year. Nope, the market is set to soar this year. Fantastic. Now let's start by just having a look at the global property indices, and we can see this is all from 100. So in 2017, when this was created, that, the average value or the value on this index was set at 100. Now moving forward to 2021, New Zealand is at 140. So that's a 40% increase, guys. That's insane for the poor Kiwis. Look at the US. Look at well, this is the US in red. Look at Canada. Look at Australia. We're here complaining about Australia, but even the UK from 2017, Norway, Sweden, US, NZ, and Canada are all doing worse than us relative to that year. Now, I'm not saying housing affordability isn't a mess here in Australia, but, it's growing here, but not as bad as it's growing in other parts of the world. That is, property prices. If we have a look at housing affordability, this is wage growth. Wage growth from 1990 to 2020. 320%, 335% for blokes and Sheilas. We can see houses have risen in Sydney over 560%, the lowest being in good old Darwin at 336, apartments 430, and the lowest in Brisbane at 328 in that same period. So your wages are not keeping up with property prices, and I'm sure that's not a surprise to anyone. Now, I did the sums on what, percentage of weekly earnings you'd need to pay a mortgage for one person of the average earnings. And you can see here, 30% in Queensland, 56% in Victoria, New South Wales, 44% in Victoria, everything above, pretty much except for NA and WA, above the 30% mortgage stress level. For a couple, it gets a bit easier, but it's still crazy high, guys. Now let's have a look at what Reuters are talking about here with regards to property surging. So, there we go. It's ready to soar. You're all excited, everyone. Residential property markets in major economies will soar this year on huge monetary and fiscal support and amid a recovery from the pandemic, according to Reuters polls, which show risks for price skewed to the upside. Average home selling prices have hit eye-watering levels in 2021 in some countries. That trend is expected to continue, driven by low mortgage rates, swift vaccine rollouts, and the easing of restrictions after deep pandemic-induced recessions last year. It's not pandemic-induced, it's lockdowns and intervention-induced recessions. Do you think they intentionally not realize that? Anyway, it's a very subtle distinction, but we have to remember that the recessions and the consequences of it are the price that our leaders have chosen to pay to mitigate the spread of the illness. The global boom in property prices comes alongside soaring stock markets, which quickly bounced back from a slump on the economic damage and devastating job losses to focus on unprecedented stimulus and the recovery at hand. Well, money just flowing in the market. You give people free money, they'll spend it. Reuters polls of more than 100 property market experts, taken from May 11th to 24th, showed big upgrades to house price forecasts for the United States, Britain, Canada, Australia, and Dubai, compared with just 3 months back, outpacing expected GDP growth and consumer price inflation. Consumer confidence has risen strongly due to the success of vaccination programs, and survey evidence suggests the pandemic has led to more people looking to move home. Supply shortages point to upward pressure on prices in the short term, said Andrew Harvey, senior economist at Nationwide. Almost 60% of analysts, or 55 of 92 who responded to separate questions on property markets across the globe, said risks of the outlook were skewed to the upside over the coming year. The remaining 37 said more to the downside. The trend in the latest Reuters poll showed expectations for strong gains this year, followed by slowing appreciation in the next few years, moderated by increased supply, lower immigration, and as affordability becomes a bigger constraint. Well, here in Australia, affordability already is a huge constraint. Or really, here's the thing, guys. Australia's a two-speed economy. You've got the people here chugging along at this level, and you've got the people here chugging along at this level. These people are noticing the price increases. I've got a mate, a wealthy doctor. His rent's gone up $150 a week. And he doesn't know how people can't afford it. He'll have no problems. But, he's worked very hard and very long to get to that level where he can demand such an income. How could an average person? That's why you've got some people who are just oblivious to it. And I wonder how many of the civil servants are in this little category up here, the top of the K. While there have been high demand for both single and multifamily homes in cities and towns, when asked how demand for office space would change more broadly over the next few years, respondents were split. 41 of 78 respondents said it would decrease, including 5 who said decrease significantly, while the remaining 37 said demand for office space would increase, including 2 who said a significant increase. The enforced remote working experiment of recent months will cause a dramatic demand shift in the office sector, with as many as 50% of office-based employees working from home for at least once a week, said Matthew Pinnon, senior property economist at Capital Economics. Even with a heroic supply response through substantial conversions and demolitions, we expect vacancy to rise markedly in the next 5 years and still be elevated in 2030. So India is going to miss the boom. House prices in Australia and Canada were forecast to gain in double digits this year. Oh, fantastic. While Dubai, they were expected to rise for the first time in 6 years. Britain's housing boom was set to roll on to ongoing government support alongside increased demand for more living space. US house prices were expected to race ahead, rising at double the rate expected in February, driven by low supply and cushioned by hefty spending by the White House administration and near-zero interest rates. Unexpected demand during the pandemic and chronically tight inventories have pushed home prices well above levels warranted by underlying fundamentals such as employment and income, said Gregory Dacko, chief US economist at Oxford Economics. The outlook for the Indian housing market was one notable exception to the global trend. Indian house prices were predicted to stagnate this year, hurt by a devastating second wave of the coronavirus, which has crushed demand and offset government tax rebates and incentives for property developers. India is currently accounting for 1 in every 3 coronavirus-related deaths reported worldwide each day, according to Reuters tally. Normalcy in mobility and housing would remain muted over the next 18 months, but the larger issues of income and jobs also remain muted, said Ashish Nanin, associate professor at St. Kitts of the India market. While the first wave provided some relief to the sector, post the second wave, buyers would become fence sitters for an extended period. So there you go, everyone. Property prices expected to soar in most of the world, most of the Western world, in Britain, Australia, US, and Canada. I mean, what are the solutions and the lessons here? Well, we've got to remember, here in Australia, our government has intervened significantly to prop up the housing market, where they've gone into nearly $1.3 trillion worth of debt. Is it all worth it? Is it all necessary? It's just going to get more and more unaffordable for people to get in the housing. Well, go into apartments, you say. Well, look at the equality of apartments, everyone. Look at all the disasters that have happened in apartments left, right, and centre here in Australia. We need to get off this dependency on property. I can't see any government, though, being brave enough to do it. Can you? Anyway, guys, thanks for watching. Like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Buy our merch from HeiseSays. We've got our handmade pocket squares. Use Gold Pass from the Perth Mint or support us via PayPal. Take care, everyone. I'll see you next time. Bye for now.